Andrew Bell, CEO of Witan Investment Trust, joins us now. Andrew, thank you for being with us this morning. I've been really keen this week to talk about what's happening in global supply chains after a discussion we had with S&P earlier in the week around these PMIs out of the Eurozone. And essentially what we learned from the latest PMIs is that a lot of the supply chain pressures in Germany and in some of the other big manufacturing hubs in Europe appear to be easing. What is your sense? What's your read of the state of global supply chains at the moment? Is that in fact the case?
Yeah, I think it is. We first started hearing about supply chains really way back in 2020 or 21 when the economies were beginning to come out of shutdowns. But then it became apparent that there'd been so much disruption to trade across the world economy that there was a shortage of chips. You couldn't produce cars because there weren't enough chips, and you had to wait 2 years to get a new car. Over the last 18 months, some of those factors, I think, have smoothed themselves out. I think production has picked up a little bit in some centers. People have resourced from different areas, and demand has softened a little bit. And one example of that is in the US monthly, the ISM survey supplier deliveries reading, which is a measure of the stress in supply chains, is lower than it was pre-pandemic. So clearly there are some areas where there are issues. I think Apple has reported difficulties just recently, but I think the sense is that the main driver of inflation is not shortage of components now, it's the tightness of labor markets and the surge in energy prices in the wake of Russia's invasion of Ukraine.
Serious shift in terms of the drivers of inflation. When it comes to China's reopening, how do you see the impact evolving on global supply chain? It seems as though the picture will be very different when you consider the short term versus medium and long term, given all of the, the turbulence involved in China reopening.
Yes, in the short term, there was obviously a huge surge in infections during December as a population which hadn't had a lot of exposure to COVID because of the zero COVID policy. Suddenly had relatively free movement. So there's a high level of infections. And in some cases, companies appear to be allowing their workers to come to work if they're not too sick. In other cases, people are probably voluntarily self-isolating so as to avoid infection or to avoid infecting others. So there has clearly been some disruption to manufacturing during December. But some of the sort of hidden indicators, things like subway use, which fell very sharply both early in the pandemic and in the last month or so, show signs in the big cities that it's bottoming out, which suggests that that we're working through a peak in the infection and therefore the disruption to economic activity levels.
Good morning to you, Andrew. Is there such a thing then as a return to normal, particularly when it comes to these supply chains? I mean, you still have, as you made note of, and as you keep speaking about right now, even just those issues still out in China. You still have the issue out of the Russia-Ukraine region too, and you have the gas issue, which there is going to be quite interesting. Plus, you have just the drivers of inflation shifting across the world globally, so perhaps not looking to take in and take on as much as before. Will there be a return to pre-COVID-19 levels, do you think, when it comes to these supply chains?
Well, the world always moves on, and I think some aspects of, for example, the energy markets probably aren't going to go back to how we were 2 or 3 years ago. I think China reopening is a very big deal, though, for this year, because one of the shocks, if you like, for last year was that unexpected reopening in the rest of the world was met by China continuing to keep its economy shut down whenever there was an outbreak of COVID. And that meant that was a drag on global activities, such as the importance of the Chinese economy. So I think, although in the next month or so, it's likely that as the peak infection, I mean, we're hearing stories from reasonably well-reputed sources of 20, 30, or even more % of the population having been infected during the last month or so. So that suggests to me that in quite a short period, especially with the traveling for the Chinese New Year, the epidemic in China is likely to peak. And on the back of that, or in the wake of that, it seems likely to me that growth will pick up very sharply in China, probably by the end of the current quarter, certainly by Q2. And China is very much a major production base for a lot of industrial components.